By now, you may have heard the big news about a successful launch of the first ever Bitcoin ETF. What is a Bitcoin ETF? What are the pros and cons of owning a Bitcoin ETF? Is it actually worth it? In this video, I'm going to answer those questions and more. So let's jump right in. Hey everyone, this is Lauren Mack with Hacking the Rat Race, and I would love for you to hit the like button and subscribe so you don't miss any more videos on money, saving, and investing. Most people are familiar with Bitcoin. It's been around since 2009, and since that time, it has experienced enormous swings from insane highs to crushing lows. Bitcoin is considered by most financial analysts to be highly speculative and volatile asset class that carries considerable risk. But with considerable risk comes considerable reward. I know people who have made a lot of money investing in Bitcoin. I also know people who have lost a lot of money investing in Bitcoin and other cryptocurrencies, like literally thousands of dollars in a matter of minutes. Many people have strong opinions about investing in Bitcoin and other cryptocurrencies. Anywhere from Riksbank Governor Staffan Inge said at a banking conference in Stockholm that Bitcoin is comparable to trading in stamps. Then you have Bill Gates, who said Bitcoin is a techno tour de force, and literally everything in between. People who support Bitcoin believe in the technology behind Bitcoin, and its use as a replacement for fiat currency has huge potential. There are also people who believe that Bitcoin has no intrinsic value and that the excitement behind Bitcoin and other cryptocurrencies will soon fade and that they will ultimately become worthless. Tell me what you think. I'd love to hear from you in the comment section below. Do you think Bitcoin is a game changer that can't be overlooked? Or do you think it's like trading stamps and will soon fade? So recently, ProShares, a company that provides exchange-traded products, launched the Bitcoin Strategy Fund. The fund trades under the ticker BITO. It's the first Bitcoin ETF to trade in the US, and in simple terms, an ETF is an investment that tracks a certain asset or group of assets. The benefit of investing in an ETF is that it allows the investor to spread out their risk through diversification because ETFs usually hold a basket of assets instead of an individual asset itself. There are all kinds of ETFs. Some of them track the S&P 500, other tracks precious metals, real estate, you name it. If you want to learn more about ETFs, then check out my video called Index Funds versus Mutual Funds versus ETFs. Which one are best for becoming millionaires? I'll link to it above and in the description below. So in this case, investors are not directly investing in Bitcoin itself, but rather a fund that tracks the price of Bitcoin, or another way of looking at it is that the fund is tracking the future contracts on Bitcoin. This means the current price and performance of Bitcoin won't always be the same as the price of the Bitcoin ETF. The Bitcoin ETF is overseen by the Commodity Futures Trading Commission rather than the Securities and Exchange Commission. The Commodity Futures Trading Commission is the organization that regulates the US derivatives market. This means that Bitcoin has even more in common with gold and other precious metals than it ever has before. So what are some of the potential benefits of investing in Bitcoin ETF? Well, one of the benefits is you don't have to go through the tedious process of trading actual Bitcoin and worrying about the complicated security and storage process that is necessary for investing in cryptocurrencies. Instead, investors can invest in a Bitcoin ETF through their brokerage account of traditional methods. Another benefit of investing in a Bitcoin ETF rather than Bitcoin itself is that investors would be able to short sell shares of Bitcoin ETF if they believe the price of Bitcoin will go down in the future. Short selling cannot be done on the traditional cryptocurrency market yet. Short selling is a common practice in a traditional equities market, but it can be risky and is better left to more experienced investors. Another benefit of investing in Bitcoin ETF is that ETFs are usually better understood among investors. Cryptocurrencies like Bitcoin, while an exciting emerging technology, is still not well understood among many. So investing in an ETF that tracks Bitcoin can provide a way for investors to dip their toe in the water with something that they are at least a little more familiar with. Cryptocurrencies remain largely unregulated by the government. This means that investors are exposed to certain risks where this is concerned. There have been cases where crypto investors have lost lots of money due to a variety of circumstances related to this unregulated form of investment. Some examples of these are stolen or lost passwords, so they're unable to ever access their cryptocurrency again, or worse, someone steals it from them. Another issue is lost wallets. Again, if you put your cryptocurrency in a wallet and lose it, then you've lost your cryptocurrency, just like if you lost your wallet full of cash. Another huge problem is hyped coin IPOs, where a new coin comes in the market and it is hyped, often by paid individuals, who shortly after the coin is offered, the price shoots up and they sell, and all the people who didn't know better lost their money. There have been stories of people creating coins and then basically just stealing everyone's money. This is just to name a few. One of the upsides people tout about crypto is it's unregulated. While that could be an upside, there's always a downside as seen here. Since the Bitcoin ETF is overseen by the Commodity Futures Trading Commission, it can provide a little more protection to investors that invest directly in the cryptocurrency market. So what might be some of the downsides to investing in the Bitcoin ETF, as opposed to investing directly into Bitcoin or other digital currencies? Well, crypto exchange operates 24 hours a day, 7 days a week, which means that you can sell your Bitcoin or any other cryptocurrency pretty much whenever you want. With a Bitcoin ETF, you can only execute a purchase or sell when the market is open. Another downside of Bitcoin ETF is the cost. The expense ratio for the ETF is 0.95%. That means for every $100 invested annually, you'll be losing 95 cents. That may not seem like a lot, but this can add up to hundreds of thousands of dollars when you factor in compounding over time. If you want to see the potential amounts lost over time after compounding, you can check out my other video called Investments, Fees, and Costs That Kill Your Return Over Time. I'll link to it above and in the show notes below. However, some people might think the cost is worth it not to have to deal with the headaches of actually purchasing and storing actual Bitcoins. It also seems as though there may be more crypto-related ETFs coming soon. The crypto industry has been hoping for a Bitcoin-related ETF for many years. Sometime around 2017, asset managers began to petition the Securities and Exchange Commission to approve Bitcoin ETFs, but their proposals were rejected because they were not able to prove market resistance to manipulation. Now there's a new push of applications for future-based ETFs. There is some speculation that if the new Bitcoin ETF is easily traded without incident or problems, the SEC might be willing to allow even more ETFs, including those that actually contain cryptocurrencies such as Bitcoin, Ethereum, and many others. The very existence of these ETFs not only means that investing in cryptos is easier, but also mean that crypto investing is gaining more mainstream acceptance. I want to hear from you in the comments below. Do you plan on investing in the Bitcoin ETF? Thank you so much for watching this video. Don't forget to hit the like button and subscribe so you don't miss any more videos on money, saving, and investing. And I'll see you in the next video.